Let's take a look at this. Good night. Okay, so we're going to look at it real quick using the Flex Orion and the Flex Daily Cycle Markers. Flex Daily Cycle Markers is right here. Let me get rid of these lines real quick. We're currently in a phase 4. And what's interesting about the phase 4 was the stop run. How many of you can see the stop run here? Normally with a phase 4 on the ES, you'll see that there's a slowdown. So for example, Don W, check it out. I want you to look and see what usually happens when we get to a phase 4. Right? It's usually a high, and sometimes it's a low. So Don W, you see the places where it's a low, right? It's kind of obvious where those exceptions to the rule occur. That's a pattern 4 straight out of your book. Okay, now coming into this econ, there's something I want you to see. It's very important. There are no instances sans 1 of this occurring, Earl. And by this, I want you to see what I mean by this. So Don, check out that pattern right there. And what you'll notice is that it accelerates up through the dot with a climax candle. So real quick, Don, look. You see how we had that huge wick down, but then the very next day we had that accelerant candle up where people were like, yay! Wait, what? Okay, there's one other instance on this chart where that happened. See if you can spot it. Can anybody see where that happened? Climax candle after a phase 4. Tim says far left. Yes. Right here. Don, you see that pattern? Okay, so I'm going to get rid of everything else but that. The banks are telling you what they want to do. You just have to listen, take their word for it. Okay, so in this case over here, check it out. That was the high. So I'm going to mark it on both sides. High. Okay. When do we come back to that high? Not for a really long time. Not for a while, is what Michael wants to say. Okay. Do you notice any similarities between this let's just go to here and this? We could start it technically, Don, all the way back to here, couldn't we? Do you see any similarities between the two of those suckers? They're almost identical, aren't they? Okay, now there's a big difference. Who can tell me the big difference between these two? What's the big difference between the two? They didn't move as far. So Earl, when they pushed up over here, we had $163 range. Not too shabby. But when they pushed up over here, just from the dot, kind of loose, they only went $132. So Don, they ran out of steam. They ran out of steam. But look, all the phases, I'm just going to come here and use a ABC pattern. A. Come on, Lydic. Oops. Okay. A, B, C, D, E, F, G. We are at G right now. A, B, C, D, E, F, G. Tomorrow is H, and H is over here. Okay, so what conclusions can we draw if they are following this pattern? The conclusion that we can draw is this. We're going to make this transparent. We're going to make this a box too. Okay, so we'll copy this thing right here. Earl, they're headed back somewhere. Does anybody know where they're headed back to? Look, you see this pattern here, Tim, from F? How it got to F and it went into a consolidation mode? Okay. There's three little wicks right here. That's a landing pad. Let me draw it all the way across. See it? All starts with those three little wicks. Guess what? Over here at F, do you see those little wicky wicks? Those little candle bodies all in the same area? If I'm generous with the range, that's the same pattern right here. So that means 564 to 556. There's at least $8 of ES potential down, and then even more to here, to the bottom of the range, which is 48. So there is, what is 48, 58, that's 10, about $15 of ES potential short right here before this thing goes the other way. So the risk is more than 1-to-1 right now. So unless it pulls back up into the high, long term, I've missed the short risk, the smaller risk opportunity. Okay, does everybody understand that so far? Any questions about that? Now, here's the thing. Every market has a resonant angle. See it? Right there. Back from G prime, we'll call it G1. There's G prime. So Tim, that angle is important. Guess what? We're going to copy it, and we're going to toss that sucker right here, because that's where the new high is. Okay, now watch. Now watch. I'm going to copy it, and I'm going to pull it down. And Tim, I want to find the new bottom. And I'm going out on a limb, and I'm saying that this was the bottom over here, Don. And I want you to duplicate this on your charts, Don, at home, okay? Because look, here's my reasoning for putting it where I put it. Follow me. Don, I've got the candle bodies here with the lows of the candle bodies. The lows and the opens. And I'm leaving the wicks hanging down. You see how I did that, Don? The wicks are hanging down, and it carries all the way up through to here, to where the F is. And then, Don, over here, you see how it catches that last little retest, the pullback there? There's no more testing at that point. There's no more wickiness. They're just looking to bounce off of it and come up and then drop down. That's the second way I know that that line is in the right spot. The third way involves a test of the 50% retracement rule. So Don, if I use my trend channel tool right here and I pull it down halfway, I should see bounces along this green line. And I do. I see that same net effect. Okay, so that being the case, I'm identifying this trend line running through the close, the finish price here of F. With me? Okay. So the closing price of F seemed to be, Tim, the resonant angle point that drops and defines the range. Okay, so if that's the case, I'm going to come here and do that, because that's the closing price of F. Everybody with me? Yes. Yeah. If you used the same methodology, you could take this line here and pull it down, and now you're at the closing. You're at the close of this day after G1, G1, 2, 3 candles. You could make an argument for that, but I like it where it was because of that test right there. Okay, so I'm going to keep it where I had it. Okay, so that defines the upper range. All right. Cool beans. October, November. October, November. Today is October 25th. Can everybody see what happened last year at October 25th? Okay, let's go back. Here's October 23rd, 26th. So October 25th would have been on a weekend. Okay. I'm going to also, though, direct your attention to this. Because we're in the phase to the left. I'm sorry, to the right of that date. So check out that in relation to this, in relation to where we are into what happened here. The little red dot, big red dot, little red dot, big red dot. And now, Tim, we're up here. Little red dot, big red dot. So look for the phase in that span of time that we're in. Little red dot, big red dot, little red dot, big red dot. Last year, October 25th, little red dot, big red dot. The year before that, little red dot, big red dot. The year before that, October 25th, inverted. It went the other way. It was going down into a bottom. Little red dot, big red dot. So that year it flipped. It went the exact opposite direction. Okay, we'll go one more year. October, November 25th. There's the same time. Little red dot, big red dot, drop. It actually came back and broke the high. But in each of those cases, can you guys see that pattern repeating over and over again? Little red dot, big red dot. Okay. None of these had the climax pattern that we were looking at with that big bar that comes up and punches through. None of those. Okay. Let me just check one more. October, November. Here's one. Little red dot, big red dot, with the puncture candle right here on the 15th. So Don, right here, there's your puncture candle, the climax, and then the drop down. Here's what I'm very curious about. Tim, if I take this and I bring it back, right here, do we see the same resonant angle? Yes. Okay. All right, so that's what we've got. And that's what I'm watching for here. I'm looking for selling pressure on the ES. And I'm going to go on a limb. I would love to see a pullback, guys. Pay attention. I would love to see a pullback into this area right here. With a stop just above the high of yesterday, which would be at 570 quarter. Tim? 570, 570 half would be a good stop. So this is in Sim. 570 half would be a buy stop. And I would come at it with 560, 850, 567.50. I would do 3 points of risk. Over here. To try to grab that pull down into this zone. So that would be an acceptable risk reward. That would be almost 3 to 1, 4 to 1. Okay, last thing I want to look at, provided the chart is still there. You guys remember when we did this analysis last week? We're coming up on doomsday, guys. So last week we were coming into this date and we had 3 pattern 5 candles in a row based off of the solar cycle indicator analysis that we did last week. The big drop day is here. This was, or at least the day that I'm anticipating. The big fall is right there. We talked about how when we see those large red, large cycle times, there are substantial moves down, like this one where we had the blue circle, and this one where we had the blue circle, and this one where we had the blue circle. So let me look real quick at where we are. Looks like Christmas. Good night. They just drove it right up there, man. Hard as they can go. Okay. I hate looking for tops in an uptrend, you know what I mean? But I want to get a sense of, do we ever see this? That's just like a shot, a rifle shot straight up coming into that red line. Let me see. Okay. If you'll indulge me just for a second, I want to throw something at you real quick. Okay. Earl, this was the last big large green to large red line right here. You see that, brother? Large green line on the left. Large red light. Okay. So that same thing was over here, right, guys? Large green to large red. Now, remember how I said they just took off like a shot? Okay, this is using the solar cycle for the reference frame. Now, I want you to follow this with me because it's important. Tim, look at this rocket launch right here. See it? No retracement, straight up. Okay. Now, look over here. See that? No retracement, straight up. So I'm looking for shared attributes, gentlemen. I'm looking for patterns that I see that are universal to the two. So check it out. Tim, there's an initial surge here, and there's an initial surge here, followed by what? Followed by consolidation. Here's the consolidation. And then, Tim, there's actually a small dip right here. Earl, the dip here was bigger. See it? Then we had this right here. And Tim, look over here. See the hump? There's a double hump. There's a bottom hump and a top hump with consolidation in the middle. There's a bottom hump and a top hump with consolidation in the middle. That's kind of cool. I think it's kind of cool. All right. The last drop here from the high to the low was $81. This is obviously a smaller section. And Tim, what I want you to notice here, just thinking out loud, guys, just thinking out loud here, the drop from here to here was $46, Earl. Do you notice, Tim, how when it came time to sell off in this iteration of the pattern done, you see how far they dropped? 66. Not quite double, but what is that? 50% more than the drop. Another $20. Meaning there was a tendency, there was a bigger fear component in this phase. There was less surety while they were up here. There were fewer people helping them push, and so the drops were more extreme. So my thought is, if we look at it comparatively, if this was $80 drop, 50% more would be 120 point drop. So that would be, you can almost sort of see where we're headed. 120 would be over here. So Earl, I see the back of this dragon right here. I'll make it yellow so it pops out. I see the back of this dragon with the hump on either side as the natural drop point. I see us down to here. Potentially. The earliest or the smallest it would go would be to 2500, 2510 area. Right in here. But I see potential for it to come all the way down to 2475. There's sort of two ways this goes down too. We have until it would be really weird if it fell that far that fast before the red dot. The other possibility, guys, is that it does this. Done, it kind of comes up and double tops right here and then falls. Everybody see the difference? There's two possibilities. It continues to drop down into the next big red line, or it climbs back up, gets a few more people sucked in before an even bigger drop. But either way, we're back towards 2500 here soon. The dragon pattern. That's a weird name, but whatever. The last red dot sequence before that had a $150 drop instead of a $120 drop. And then, Don, look here, you see where it had that double top into it? There was the prior swing high right here, brother, right? And you see how they popped it and then they dropped it. I want you to know that's a possibility over here. You could sort of see that happening, right? That would be a pop and drop over here. Beginning of November, we're almost there. Gosh, man, another week. And then boom. Okay, so that's that red dot. And then over here, Don, they didn't even, there was a very clear dissension into that point. But even there at that red dot, you'll see that they sucked a few more people in. Ready? There's the high, the prior swing high. And Don, look, they just took it out right there. I'll blow it up so you can see it. So here's two instances of a stop run of the prior high coming into the major swing, this primary division of solar cycles. So we have evidence now of that here. We have evidence of that now over here. Okay, this one pulled all the way down into that one before they came back up. But even there, Don, look, when they approached the high, do you see that drop too? So in all of the last three instances of this major division line, the prior swing coming into the division line becomes an extremely volatile short point. The prior swing becomes an extremely volatile short point. The prior swing becomes an extremely volatile short point. So identify the prior swing high coming into that division line. And Don, look, there's the last example of it. See it? Prior swing. boom, and there's the drop. It never comes back. So keep that in mind as we come into right here. So as of right now, gentlemen, the prior swing high is right here. 25.7750. How's that analysis? Everybody on board with it? So far, so good. Go back and watch this video a couple times. Last week we looked at it too, either Wednesday or Thursday when we drew these lines to start with. Okay. Good stuff. Tim says that makes the pop and drop more probable.